The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the October 2nd, a magnificent Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in. Now is not too soon, 877-927-6648. If you can't dial in, you can always send me an email, steve@tfnn.com. Just inside that subject heading, put radio show question. And, of course, inside the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on magnificent Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trade up 117 points, up 0.5%. She's trading at 22,522. S&P up about 0.3%. That's 7 points, trade out at 25.26. NASDAQ 100 is flat. Russell 2000, the big mover to the upside, up 0.8%. That's up 12 points, trading at 15.02. I hope you're not short the Russell 2000. The semiconductors are up 6 points out here, up 0.5%. To the downside, you got the trannies. Transport's off $42, down 0.4%. Volatility index down at 943. Gold is off $7. Silver is flat. Light sweet crude back about $1.15. To the upside, you've got Priceline up $30, 1 at 6/10%. Intuitive Surgical up $16. NACO Industries up 14 or 72%. Maybe that's a buyout. Maybe it's, I don't know what it is, but it's up 72%. That much we do know. Regeneron Pharmaceuticals, REGN, up $12 or 3%. Mercado Libre up $6, about 3%. To the downside, it's Fidelity National up $13. Wow, 28%. Bluebird Bio, maybe they have something to do in Spain. I don't know. Just a guess out there. Bluebird Bio down $12 might be a bad guess. Fizz, oh, what a relief. It is not. National Beverage Corp down $8 or 6%. Chipotle down $8. Google's off $6. Ulta Beauty Salon down $5. Vail Resort off $5 as well. So we have a few things to look at. Of course, what I want to look at is what you want to look at. So give me a call or send me an email, steve@tfnn.com. In the meantime, let's go take a look at what the markets are doing right now. I mentioned the Russell 2000. Up big again, another day. We're going to take a quick peek here at the equity futures contract for the Russell 2000. My best estimation as to where price is headed to at this stage of the game, it's just an initial estimation, is in the 15-16 type area. I don't have anything on any chart that we can go take a look at that would verify that that's really resistance. Now, at that level, we would have a 1.618-ish butterfly. Now, that butterfly is nothing more than an A to B equals CD pattern off the bottom. We can see here when it made a nice bottom out here. It's actually a nice four-river morning star that occurred. Let me get my crosshair out here. This is the Russell 2000 equity futures contract, the TF, back on August 22nd. The actual indice gave us a nice little hammer candle, I believe, on that same day out there. So clearly giving us a nice bottoming signal, that nice little price relative strength divergent pattern that was taking place at that stage. Now, does price have to stop at 15.16? You're at 15.03 right now? No. This thing is a monster move to the upside off of those lows out there. So just be careful. Big move, hardly any retracement on its B to C leg out here. So price will continue to go higher until we see the bears actually show up. And we'll see that with some type of bearish reversal candle signal, just as we saw at the bottom, a bullish, the opposite, a bullish reversal candle signal. Now, if I go take a look at the other time frames out here for the Russell, here's the 240. Strong leg bull. Let me just hit my update. Maybe price is starting to move higher. It is starting to move higher with less relative energy on this chart. Doesn't mean anything. Doesn't mean a hill of beans until we see the bears show up. That was on the 240-minute or 4-hour chart. If I take a look at a 2-hour time frame out here, let's see how this thing is moving higher. Doing less relative, well, maybe not. Well, let me see here. I might want to change this. I probably have this set to wait for the bar to complete, and it's normally a good way to do it. Yeah, no, I don't. So it's moving higher with energy. That is on the 2-hour time frame chart. I'm not even going to go look at the 30-minute time frame. It just is a thing of beauty. So that's what's going on inside the Russell 2000, inside the Dow, which has been nice and strong. This appears to, let me just hit the update button. Yeah, this is still moving higher, doing less relative energy. You see those black diagonal signs out here, or in part of the automated tool that I've created. So just lets me know in a heartbeat, lets you know in a heartbeat that price is moving higher, doing less relative energy. Is it a problem? Never a problem until the cavalry shows up. In this case here would be the bearish cavalry. And of course, this pattern can go away by getting the necessary energy that it needs to continue moving to the upside. That's the only pattern inside the Dow equity futures contract that just makes you say, something to think about. Now, there's nothing to think about unless you were to see a close below 22,384 out here. That is not in the cards, or at least not in the cards at the moment. If we go take a look at a 30-minute time frame chart out here, let's make sure that I have these settings accurate. When I say accurate, at least from a show perspective, let me change that to false. There we go. That's going to help. So is price moving higher, doing less relative energy? The answer is yes. Do we have any kind of bearish reversal signal? The answer is no. So what does that mean? That means price can continue to move higher. Support on a 30-minute time frame is 22,404. No problems until Stevie's red line is broken. If we go take a look at the NQ on a 30-minute basis, this is going to show you why we pay so much attention to the pattern, other than the mere fact that it's called every single major market top since 1856 out there. So it goes back a long way. It is a beautiful pattern. If we take a look at what was going on inside the NQ earlier today, all the way up until 11 a.m., price was moving higher, doing less relative energy. Those stars were starting to shoot. That's called the opposite of the hammer candle. That's what you would like to see. At a top, you had follow through on the very next session. We saw price move lower. So inside the NQ, let's go try to figure out what's going on as it gave you that short-term topping signal. Let's look at the weekly time frame chart. Not a surprise that the NQ still continues to struggle as it gets up to those levels. Those levels being the top of the daily box in the 6,004 area. Is there a problem in the NQ? Not as I see it at the moment. But we'll continue to hunt. Of course, I want to hunt and peck and take a look at what you want to look at. So give us a call, send me an email, see Rhodes with TFNN. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So it was the weekly time frame. I don't know if I got a chance to say that you and I were looking at with regard to the TAS market profiles. So you can see this chart here, which takes like the ES Mini, the NQ, the YM, the Dow, and the Russell 2000. You can see that you've got green shoots everywhere except in the NQ. So everything is above resistance. Good suggestion. You don't want to be short. Now, the NQ is the one that has not confirmed the RSVP to the bullish party out here. The structure of the weekly box, it's a bullish structure. It hasn't been able to close above 6,004. If you do see a close above 6,004, again, this is a weekly chart. So at the end of this week out here, it's telling you that it actually was just a male problem. That I don't mean, gender specific. I'm talking about the RSVP just got there a little bit late because it would then be confirming the bullish breakout. Now, it's not bearish. Okay, so as we take a look at it, it's just price trading into resistance, backing off a little bit, continuing to move higher. And the reason I say it's not bearish is if we just take a look at the 60-minute breath for the QQQs or the NASDAQ 100 out here, at a minimum, in order for this to give you the first bearish message, you would need to at least see a crossover. Now, crossover meaning the green line ducking below the red line out here. And this is a 60-minute time frame. When it's above it, it's giving you a bullish message. So if we take, that's just the 1 hour time frame. We can look at the 4 hour. There's 4 time frames that you and I can look at. Here's the 4 hour time frame, bullish. If we take a look at the daily time frame, the one that's really more important to you is the mere fact that this thing went to a bullish message back on the trading day of September 27th out there, when we had 33% of the entire constituents inside. I like that, a big word, constituents out there. Just pulled that out of nowhere. But we're trading above the top of the box versus below the box. As we speak right now, you've got 47 of the, what is it, 100 and, what is it? Get 49, so you got 56. I'm sorry, you've got 96, 115 of the 115 issues being traded with inside that. We got to call it the NASDAQ 115 out here. But in any event, you've got 47 above and only 14 below on a daily basis. So as much as this is really struggling, when you actually look underneath the covers from a daily basis out here, It's really not struggling that much at all. And then finally, we go take a look at the weekly time frame here. Let's go see what that looks like. You've got 45% of the issues above the box and 13% of them below the box. So even the intermediate term time frame is very bullish for the NASDAQ 100 out there. The S&P 500 looks as good or better, quite frankly, than what we just looked at here. So we're not seeing any bearish signs. Now, the market profiles are a lagging indicator out here. Now, they're a good lagging indicator, better than most lagging indicators. But the cool thing is we've got 60 to 40 daily and weekly. So you're going to see the crossovers occur out here. The tool or indicator that is not lagging is the one where price moves higher or lower, does with less relative energy. Just like we saw out here inside of that's the gold contract. We'll go take a look at that. If things happen for you, there must have been a reason why I had that pop up on my screen. But here, when you see inside the TF, price moving lower, doing less relative energy, you had to be a candlestick expert because the software that I have is only going to pick out the 3 River Morning Star. And you had to be a candlestick expert to understand that the 4 River, just as powerful, if not more powerful. In fact, the March 2009 lows inside the Dow created that pattern out here. And that's what we'd be looking at up at the highs. Is price going to move higher, do with less relative energy out there, at least to give you an idea that price could pull back into one of these profile levels. We don't have that, so that's going to be a leading indicator, just as the A to B equals CD pattern can be a leading indicator. But don't let that lead you into trouble out there. Wait for the confirming sign. Look, if there's one thing that I can share with you with regard to leading indicators out here, things like A to B equals CD patterns and so forth, because they are great projection tools or measured moves. I don't care whether you use it for the Head and Shoulders shampoo out there, whether you use it for consolidation patterns. Just because a price gets to that area, wait for the cavalry to arrive. Otherwise, price will continue going in that same direction. Now, I did pull over the gold chart out there. Why, I don't know. But let's go take a look at it anyways. We can see the Goldilocks out here trading out about 1276 on its way down to the 1245 level. Now, it's going to have a potential stop at about 1260-ish. Don't quote me on the exact price. That's only about $16 to the downside. If it slices through 1260, though, that spells trouble. And 1245 is not really going to be the target out here. It's going to be more like 1226, 1201, something along those lines. But it's got to be one thing at a time. And if there's any one thing at a time that you and I know about, that one thing would have to be what? Curly would say, well, Steve-O, that would be the Japanese yen. So if we go take a look at yen futures out here, try to figure out what they're communicating to you and I. At this stage here, which is 1:24 in the afternoon, not much. At least not much from the standpoint of, hey, I want to start heading higher out here. Though it was a nice little bullish signal a couple of days ago, a little piercing candle. So we know that there are some buyers that are hanging out here. Is that level going to hold? I don't know if it is. It doesn't matter to me whether it does or it doesn't. The key level is Stevie's red line. If price were to get above Stevie's red line, that's going to be 0.8962 as we speak at the moment. Then gold and silver and T-bond futures have a chance to start making a counter-trend rally. To where? Well, we'll cross that bridge when we get to it. Otherwise, things are going to continue to head south. When I say things, I'm referring to the Japanese yen, I'm referring to Goldilocks, and I'm referring to the Treasury bonds out here. If we take a look at T-bond futures right now, just a sideways-ish type move, but no reason for this not to head down to the 150 area. 150.34, 149.04, somewhere right in that general vicinity. Again, we'll keep one eye on yen futures, another eye on bonds, another eye on gold, in order to put all of those tools together. It'd be like putting Humpty Dumpty together again. That's what you and I are doing. I see a question that says, how about the NYSE Composite TAS Weekly? We don't really have, unfortunately, the TAS profiles don't work as well on the cash indices as they do for the equity futures market. So to put those up there, I would provide you with misleading information. And you're not going to get this hombre to do that. What we can say with regard to the New York Stock Exchange is strong like bull out here. When we say strong like bull, we're referring to the advanced decline line at another new all-time high as we speak today. And that is being confirmed, by the way, with regard to the volume. So don't let anybody, I mean anybody, tell you that we don't have a confirming volume signal inside the New York Stock Exchange, because they're smoking crack out there. We have it. You've got a new confirming high today in both the advanced decline line as well as a summation line for the volume. Here's the key about that. When those two things agree with each other, well, then they're in agreement. And that agreement is there ain't no way that this market is forming any type of significant market top. End of story. And at 126, that's the story for the New York Stock Exchange. Zero.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So I updated my phone this weekend, the new iOS system on there. It's got several new tools. The one that I kind of like for the radio show is on the email system, because there's a way that you can click on this so that only the new emails that you get come through, which is helpful because on occasion I have missed a couple of your emails out there. We've done them the next day. But, you know, if you take the time to send an email to me at steve@tfn.com, I certainly like to be able to get to it. So it just makes it a little bit more clear to be able to look at out there. Lord knows that's helpful to me because literally 1,000 plus emails arrive each day out there with 995 of them. That's right, because I get 5 good emails from listeners like you or more that are mostly junk out there. That's an app that you and I need to create, is get rid of all that junk. That would go ahead and make our life easier. In any event, not speaking of junk, but we had a request out here to go take a look at copper. Copper's not junk, is it? We take a look at high-grade copper, the December contract out here. Now, Cam, I don't know what time frame it is you're looking at, what you're looking for, bullish, bearish, so on and so forth. If we take a look at the market profiles, though, we can take a look at first the weekly. And the weekly here shows that they're supported about the 284 level. So you're bullish from a daily perspective. Well, from a daily perspective, in order to be bullish, in order for me to get bullish, there's going to be 2 levels at least that you have to see copper close above. Otherwise, the downtrend, yeah, you heard me correctly, the downtrend will continue. First is going to be the daily top of the box out here. That's a brand new daily profile. When I say brand new, I mean this formed 3 trading sessions ago. And the top of that box is 297. If we go ahead and we blow that up on my screen out here, and we just go ahead and make some quick adjustments to it, such as turn off price. You might say, turn off price. What in the heck are you talking about out here? You can sort of see the brand new profile, red, green, and really it's supposed to be red, blue, and then green. The green being the bottom of the box. But what you can notice here, Cam, is that the center of the box, 295, closer to the top of the box, 297, versus the bottom of the box, 291. This says that the structure here is bearish, let alone you have a new daily profile that formed below the prior daily profile, just telling you about the downtrend that is in there. In order to be bullish out here, you do not want to see 291 fail as support. If you do, price is headed lower. Above 297, well, maybe you've got something out there. On the shorter term basis, as we go ahead, we turn prices back on. On the shorter term basis, you've got also a brand new 60-minute profile, meaning it formed about 2 hours ago. 295, that is also a bearish structure. Let's turn off price here. You'll see what I mean. See how this center of the box closer to the top versus the bottom says sellers want to explore this entire area. No reason for price not to get down and test the 293 level. Of course, what you would also like to see is for this bearish structured box to fail. The top of it, I mean, which is 295.91 out there. You're looking for that to at least fail to give you what we'll call a glimmer of hope. But now if we put up Stevie's chart, where we take a look at Stevie's red line, you're going to see that the bounce today ran right into resistance, and that is Stevie's red line. I don't mean like right to the tick. Instead, what I mean is right to the tick. Now, that's telling you that there is more retracement to come. Is that retracement going to find support at the bottom of that daily box? I don't know. But watch those levels out here. At this stage of the game, running up into Stevie's red line, failing to be able to cross that is one of those red lines that you want to pay attention to. And this says that high-grade copper can absolutely head to lower prices. So, Cam, I hope that helps you out. Let's go to Mike in Ormond Beach. Mike, thanks for calling. Thanks for holding. How are you doing today?
I'm doing great, Steve. Steve, I've been, watching, we have this little pullback now in oil, and I've been looking at the OIH. Do you think there would be an entry in this, or do you think oil may be on its way to much lower prices?
So let's take a look at light sweet crude. I believe we're trading the November contract as we speak right now, and just the opposite of what we just looked at in high-grade copper. High-grade copper went up, tested Stevie's red line, failed to cross it, says it wants lower price. If we take a look at light sweet crude out here, it's now trading below the red line. That says that lower prices or retracement can be coming at us. Now, what we want to go do, you and I, is go take a look at those profiles. Now, the profiles that show up here is 50.04. I don't know if that's the case. I'm going to feel more comfortable when I switch over to this other system out here to answer that question for you, because what we're going to look for here is Stevie's synthetic contract versus the current contract so that we have more data to take a look at. So as this daily chart populates, go ahead, populate. Yeah. So here, what you're going to be watching for, since you've been watching it for a while, you want to watch this 50.04 level because that could be the extent of the pullback. My preference would be to see price close above that red line number, which is about 51.30 as we speak right now. I'd say be patient. If it doesn't close above, because you're kind of like in the middle of no man's land. You're at support, but you're also below what I'd call a resistance level. So 51.30 also happens to be the top of this daily box. If price is going to resume to the upside out here, then you want to see price close above those levels. If you're just making your OIH trading decision based on light sweet crude, that's my take as we take a look at light sweet crude right now. Your question was, can light sweet crude pull back further? Only if it closes below 50.04. If it does, then that's the signal that it's giving you that it wants to close, that it wants to move lower. Now, below 50.04 gets you back inside the top of the weekly box, which is at 50.08. So you've got some really nice levels here to help you make your decision about getting into, let's say, the OIH trade. Thus far, support has held. I don't know if it's going to continue to hold out here. What I'd like to see to confirm that would be for the 60-minute time frame chart. I'd like to see price close above 50.78. That's the top of at least it's a short-term profile out here. So that's what I see on the crude oil contract. If we take a spin on the reading and we go take a look at the readings of the OIH for the daily, weekly, and monthly time frame out here, you're going to see that it too has some profiles, and the bottom of its daily profile is 25.36. So as long as price doesn't close below that, it's not really looking too bad out here. Today's volume on the current retracement, 3 million shares. That's going into 9.5 million shares on September 25th. So you have a light volume pullback. Where's the better entry? I think, are you going to just totally make your trade based upon light sweet crude?
No, I'm looking at that and the OIH. I traded the OIH a couple times, and I've got out, so I'm looking for an entry back into that.
Okay, so if it's not entirely based on light sweet crude, then in the case of the OIH, and here's a daily chart, you've got 25.36 shows up as a daily profile. You've got Stevie's red line that is 25.44. That, in my opinion, would be your entry price. And if you see price close below it, just take a short, a small loss to get out of it.
All righty, thank you.
You bet. That was Mike in Ormond, light sweet crude, and the oil holder. There's Van Eck Oil Holders Services.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Now it's up about 120 plus out here. And back to Mike just for a second out here, because I had asked him the question. This was without me actually knowing the answer to it. But I asked the question, is your decision on the OIH entirely driven by light sweet crude out here? Now, this tool, this chart out here, you'll see the top panel is the OIH. You'll see the center panel where you've got red bars out here. That's my correlation tool. So it's taking a look at the average over the last 10 days, looking at the correlation to see if there is a positive or negative correlation. Above zero, positive correlation, which means that the direction of light sweet crude and the OIH are hooked together. Below it says that they're moving in opposite directions. So, Mike, probably you're right on here with regard to the OIH, and in trying to trade that vehicle, you'd certainly like to see both it hold its levels of support because of the positive correlation. Now, if we take a look at SAT inside of the Tiger's Den, SAT is the, we don't know what SAT stands for out here, but SAT was looking at PSX, Phillips 66, another oil-related product. What you'll see here, and all we've changed is just simply the ticker symbol. You'll see that it is not, it is correlated, but not anywhere near like the OIH. So this is helpful, I believe, to determine SAT's question, which is, hey, what's your opinion on it? So we don't have to entirely base our opinion on what light sweet crude does. So that is helpful, my opinion. That is helpful to know. You asked my opinion, there you go. Boom, you got it. Or you got one of it, one of those opinions. Now, if we take a look at the 3 time frame market profiles out here, we take a look at daily, we take a look at weekly, we take a look at monthly, you're going to see that price is above all of the tops of boxes. Today, very strong, Sat, because you have a brand new profile that formed. And if this closes above 92.19, very strong to have a brand new profile forming for price to be able to overtake where the snipers are sitting, so to speak, the top of the box out there. Run over a steamroller baby. Now, what we also have to realize is you've got a 100% move of a move that is underway. What do we mean by that? You're back up to the swing point from November of 2015. And you had that little bearish reversal candle out here on December 1st. Nice big old bearish engulfing candle. So what's the extent of this? 94.12 is very likely going to get hit here. 92.47. 55 million shares is what you like to see that get taken out with. Last week you had 42 million shares. You're kind of moving into the top of a what looks like could be a consolidation out there. Does that mean you exit it? No, I don't know what your time frame is that you are holding this. Nice trade to the long side. This could be in a consolidation pattern where the high of 94.12-ish, don't hold me to the tick or the penny out here, where that acts as resistance. Now look, if you close above that, old resistance should become new support, but it can easily also pull back inside this consolidation down to the 74.66. That's not my prognosis. We need to see what happens at that 94.12 level. So I hope that helps you out. Let's go to Ron in Denver, Colorado. Ron wants to take a look at BHC. Ron, how you doing? Thanks for calling.
Yeah, thank you, Steve. Sorry to call you so late. And this is a little stock that I've got about 4,000 shares and about 20 calls on 3, 4, and 5. My calls are in, November, December, and January, but obviously the stock's strong today. And
what's the news behind it? What's the news behind it? Do you know?
Well, number one, a few years ago they won a lawsuit against Apple on software that Apple uses, FaceTime, where people can look at themselves on the screen. That's actually their software. But Apple lost the lawsuit. Apple owes them about $700 million. I'm hearing the judge is supposed to make a judgment or make a settlement on the 13th of this month. I said, I'm hearing.
Okay.
I don't know.
Okay.
But they've also supposed to get $20 million. Japan says they're going to give them $20 million and buy into the stock at around $385. And the stock before, they have this software that that Apple doesn't want to pay them any royalties on. At one time it went to $40. There's about 13, 14 million shares short, about a third of the outstanding shares. So I don't know. It's hard to evaluate.
Yeah. Well, hey, good news. Just congrats to their legal team, to have won. So the question is, this is a moral victory out there, right? Because who knows what this lawsuit has done to them? Patent type cases out there. To get the most expensive part of a patent case is defending it, which, as you pointed out, this stock here, the company was trading up at $40. It's trading at $5 out here right now. So, a victory, but at this stage here, from a shareholder standpoint, could just simply be a moral victory. But your question is, hey, what do you do out here? And so instead of the news, if we just look at technicals out here, and you say the date when the judge is supposed to decide something is which day in October?
13th.
13th of October.
Yeah, it's they want to try 2 jury trials, but they just can never get it. The judges, they can't get a judgment. They can't get Apple to move. Apple's got enough power to keep stalling it, and it may happen if and the company, obviously, if they don't win, they don't have any money.
Yeah, so if you take
I don't know. I missed a spike today. I missed it when I didn't see it at the time.
Well, I don't know that you. I mean, come on. I don't know that you missed it, but at this stage here, they certainly need the cash flow from Apple, and Apple knows that too, because you take a look at earnings before taxes. They haven't made any money here in years 13, 14, 15, and 16. Don't know about it before, but heck, even from an operating income standpoint. So the company has some problems, right? They're not even. There's problems. Forget about it. But I don't know what the lawsuit expenses are, legal, stuff. They put in $23 million in 2014 to pick up legal settlements as income. So I don't know if that's when they were awarded. And if it was, how about that? It's already 2017. So back to the chart. What do you do out here? It's trading. It's got one of these 100% move things going on. June 14th is where the level's gotten up to. That at 4 million shares up there. And in essence, you're testing that candle, that swing point area with about 2.9 million shares. You got the calls. Maybe you sit on those and see if you get back up to the highs of today out here, 636. I don't see necessarily any reasons to sell out here, but it's what other levels can we take a look at on VHC out here? I'd hate to see this thing get back and test 426 for you. I don't know that that's going to happen. It's up where people are taking profits, though.
Sure.
Yeah.
Well, I just wondered if there was any. I realize it's a very difficult deal because this is, you're betting on the come of them getting a judgment on this lawsuit and a few other things. But, they did win I think $200 million from Microsoft 5-6 years ago.
Wow.
But Microsoft's the only one that's ever paid them. And they
Hey,
won it
Ron,
against Apple twice, but Apple never paid.
We're just about to go off. But, hey, thanks for the call, and, hey, nice trade out here. Just a money management.
Thank you, sir. Thank you. Sorry about that. Bye.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So, we were talking with Ron earlier about this ticker symbol here, Vernetics Holdings Corp. But maybe David White. David, you're probably listening, and maybe you can touch upon this for Ron in Denver because you probably have a better feel for this thing or this equity, or maybe, maybe other entities that have gone up against Apple and have won, whether that truly was a victory or a moral victory here. It's possible, Ron, that there's a weekly A to B equals CD coming out here. We won't know that till, let's say, the end of the week because the B point, which is 540, you're at 542 right now. If it closes above that, looks like it would have the volume. That would get us up to 670, 771, 899. There's a high volume bar out here from February in 2016. VIRNETX, ticker symbol is VHC out here. So Ron, David will take a look at it. Again, I think it's just a trade management, money management. You own 4,000 shares. You've got call options. So there's never anything wrong with, taking profit off the table. Always nice to have a no losing trade, right? You take your principal back. All those great little tools out there that you can use to manage through this. So I wish I could provide you with better information, but we've got your back here as much as we can. So, folks, days like today are tough, very difficult. Difficult for me because you know that I believe that everything in life happens for you. But on days like today, it becomes very difficult for me to say that. But I know that to be true, so I don't know anybody in Vegas that's a part of, what went on there. But, how can you not be touched by what happened there? So let's just send out our TFNN white light to all those families out there and hope that somehow that things in life happen for you, not to you. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.